Today, I want to talk about an article that came out on marketwatch.com about a XIV trader I've lost $4 million in 3 years of work and other people's money. So let's get straight into it. Do not place a trade based on what you're seeing in this video. Trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets, and trading is the most hardest thing you'll ever do, and it takes a long time to become a good trader. So this video is just educational only. If you're struggling with your trading right now, then click on the very first link in the description and get learn a free training, the 7 universal laws to become a master trader that will boost your success, consistency, and confidence without spending a decade trying to figure it out. Click on the very first link in the description right now. Alright, so that disclaimer is there for a reason, and that's there for you to anyway, let's get straight into this. What I want to talk about here, guys, is with trading, one of the hardest things that I've done, and I do it from time to time, not as much as now, but what happens is this, I don't know what it is about the human psychology that happens. All right, you can check this out here. But what happens is when we're trading the markets, right? We trade well, and you might be trading well for 2, 3, 4, 5 months, right? And you're building your account, and you're building your account, and you're building your account. And as you can see, this guy or this person here, I started with $50,000 from my time in the army and a small inheritance, grew it to $4 million in 3 years, which 1.5 mil was capital raised from investors who believed in me. Now, so that means he basically took $50,000 to 2.5 million in 3 years. 2.5 million in 3 years, just trading what he was trading by himself, right? Incredible return there. So one thing I want to talk to you guys about is that ego that comes in when we're trading. Firstly, you go, and there's these stages that we go through on what it takes to be a consistent, profitable trader. And it's not a matter of give me a trading system and I'm going to do well. We all know that, right? When there's a lot more that goes into it. There goes the discipline and the discipline and not forcing it, not rushing it, and waiting for the best and leave the rest type thing when you're trading. Right, and when you go through all those different characteristics and all those disciplines and all those habits of what it makes to be a trader that actually make money from the markets, now what happens is you've got through that, and you've got through that first stage. And when you get through that first stage and you're actually disciplined and you're actually starting to make money, you're starting to do well from making money, and you're really doing well. Now there's two things that starts to come into your side, into what happens with your trading. Two things. One, fear of losing it, right? So before you're fear of it not working out, or fear of failure. Now you're actually making money. Now the next fear comes into it is fear of losing it, right? Now, oh my goodness, I've made all this money. I don't want to lose this money, right? So now you become fearful of losing it. But also what ends up happening is you either do fearful of losing it, or you either become fearful of losing it, or you flip right to the other side to where you think you understand the markets, you know the markets, and you're king, and the ego is there, and you've got this and all that sort of stuff. This happens with me time to time, right? And then you'll double up and double up and double up, and then bam, the market will whack you. And it's like, and this has happened to me quite a few times over the last 13 years of my trading experience. And it's just like, man, I can see the reason why, I do well and I double up and I double up and double up. And before you know it, right, like just recently I grew my account around about 50% in about a few months, right? So I had phenomenal few months trading, and I grew my account by 50%, around about that, 50% or more. In a few months, right? So I was doing really well, and I thought I was king, right? And I was trading well, had good risk management, etc. And then bam, what ended up happening? What happened was I started doubling up, and then bam, I took a position 4 times my normal size, and I had and then basically what ended up happening was I had about a 60% loss on that. So therefore I made 50%, and then you guys may have seen that. The 50% of the money that I made, or like the 50% of my account, that 50%, I wiped away about a quarter to almost half of that. So my account was still going up. Oh, so thank God for that. But I shouldn't have had that setback, right? But what ends up happening with traders, right? And this is one of the what we call the equity curves of basically what ends up. Let me show you what I'm talking about here. So some traders have problems making money. When you start making money, I've seen this happen to so many traders, and it's a characteristic. And it's a characteristic of what ends up happening with their ego, right? That you do well, and your account will start to grow. This is the equity curve, right? Your account will start to grow, and your account will start to grow, and your account will start to grow. And you might go through this enormous spike. Like, oh my goodness, I've got this. And then guess what happens? I've got this. I can make all this money. And you start to ramp it up, double up, and then bam, right? And sometimes, well, actually a lot of times what happens with traders is we go straight down to zero. In fact, we go below zero, right? Because we now owe money and so on and so forth. And it's a disaster. We may owe money to friends or family, or we owe money to the bank because of our house and so on and so forth. And this is something, this is the euphoria. We've got this. I'm making all this money. Oh my goodness. And you start to swell up. That ego trading just never, ever works out. So that's basically what I see happen on this article here. And it's just like, it was so incredible here. He said here that if you want to make it feel better, I was short from the election of Trump all the way until the 26th of the 18th. And I basically ran out of money and liquidated the last of my account. He wrote, I sat there through the most brutal bull market rally in history just to watch the crash begin a week later. It's like, oh my goodness. And if you actually look at the markets, look at the charts. Let me bring up the charts here. This is the charts here. Let me bring up, what was he trading? He was trading the XIV. If you look at the XIV chart, right? XIV chart. If you look at the XIV chart, and obviously we had this big. This is the daily chart. But if you bring up just a simple analysis, and this simple analysis could have saved this guy so much money, of trying to short this XIV here, right? Just basically trying to short because he always thought it was going to come back. If you just look at something simple analysis, and you guys have seen me talk about this before, this simple analysis, what was this here? Low, higher low, higher low, higher high. The buyers will continue to raise this up again and again and again. So he shouldn't have been trying to short the market. Now, yes, again, if he kept shorting it here and shorting it here and shorting it here and shorting all the way up and averaging out, and then we had the crash, yeah, he would have raked in. But it just didn't happen. All right, Murphy's law is that, and especially if you try to short the market, the market will stay up more until you lose all your money. Then it'll start to crack. It happens all the time. So something simple as that, it could have actually happened. But you can see what happened here. And this was actually, I'd hate to be long the market anyway. I hate to be long this particular ETN here. That's what it is. I think it's an ETN. I think it is. Let me just double check that there. Yeah, it's the inverse VIX short-term ETN. So he was basically playing the VIX there for the last few years, and he thought this is all good and so on and so forth. He thought the market was going to crash and so on and so forth. Anyway, so even being long this ETN, you would have literally lost 90% of your position value in the markets. And this is where it's so one thing I've really learned in the way of trading is that what I do with my trading is that I put in around about 5%, 5 to say 10% max of my account on any given one trade. Right? So, and generally I don't like to have any more than 20% of my account in the markets. And I want 80%. Why? Because of something like this. If something like this happens, I've still got 80% of my money in my account. I'm still ready to go the next day. Makes sense? And this is what we call a safety mechanism. You may make money all the way up, but you want that sleep at night factor. So that's the reason why I try to keep at least 80%, a maximum say 70%. Right? That means 30% of my money is on maybe two or three trades, or maybe even 4 different trades. These are split up to 4 different trades. But even if I'm trading 4 different trades, right? If I'm trading 4 trades and I've got 5%, which is roughly, or it's pretty much what I trade right now, So let me actually do this here. Let me go to, so if I have 5% of my account and I'm taking 4 trades, right? I have 20% of my account. That means 80% of my account, which is pretty much what I do now, pretty much every single trade. That means now if the whole world goes belly up and I completely lose 100% of my position value, I've still got 80% here to say, you know what, I'm still good to go. You know what I mean? Yes, that hurt and I didn't like that, but I'm good to go. And this is how you grow your account, right? And this is, and you know, and then out of those, if I'm taking 4 trades, I know on average that I'm going to have at least a 50-50 win-loss ratio. Majority of the, right now I'm getting about an 80% win-loss ratio, you know, but just say, you know, if I'm 2 wrong, 2 right or whatever, or generally most of the time I have 3 of those trades work out and then 1 loss or so on and so forth. But you get what I'm saying there, right? And this is how you grow your account, by protecting your account as well too, right? It's how much money you actually have in the markets at one time. And so therefore, when I'm trading options, I'm just buying options. I'm not writing options at all. So therefore, whatever's in the market is 100% in the market, 100% at risk. So therefore, if the whole world goes belly up, guess what? I still have 80% of my money sitting there in the account saying, thank you very much for protecting me. I can now take the 80%. I can now pull 5% of that out and go place another trade ready to go for the next day. Make sense? One of the biggest mistakes that I've done in the past, and what I see with this XIV trader who lost all his money, guess what? He had all his money in one market, in one position, all his money. And one of the really bad things is he was fighting the trend, high highs, high lows, high lows, high highs, high lows. He was fighting the trend. Don't fight the trend. Just stay. I don't get it. Why do some of these traders, I see some of these people, these companies, right? They do divergence trading and they fight the trend. Do not fight the trend, because more times than not, you're going to get your head handed to you. And this is an example here of what happened. So the reason why I wanted to do this video is because I wanted to help you guys out in your understanding of what happens in the markets, and what happens, you know, what happens when you go into trading, what happens initially with your fears, but then also when you start to make money, you got that fear of loss, but then also the ego, and the ego starts to double up, and you start to throw too much money in the markets, and then whack, you get this whack. It's like, oh my goodness, I can't believe that. I can't believe I just worked so hard, you know, for after 2 or 3 or 4 months or 6 months worth of work, and just one really bad month of me being egotistic, I've wiped out 6 months worth of profit, but I've blown up my entire account. I can't believe that. I've done that a number of times in my trading career, and now I'm not like that. Now I'm not like that. As I said before, the last basically 2 months or so, I had about a 50%. I had a 50% return on my account. Out of that 50%, I went through about a week there where I lost around 20% of that. Around 20% of that. And it's just now that was actually a few weeks ago. And it's only just now am I back at that break-even level now. After trading really good for the last few weeks, I'm now back at that break-even level now. And so overall, if you look at my equity curve, right? If you look at my equity curve here, I had a nice run up, 50% return. Then I had a pullback through here, and now I'm back up like that. So that's basically what my equity curve looks like right now. So, and I'm back here, and now I'm ready to break that ceiling and continue this up by trading smart, position sizes, and risk management as well too. So hope this helped you out, guys. Leave a comment below and let me know what you think about the trader, about risk management and trade management, and what you do to protect yourself with risk.